Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Thursday, January 15th. Today on the show, we are talking about TSMC's big quarterly results, and we'll speak with our Asia Bureau about why the company has become so dominant in the chip manufacturing story. We'll then have the latest on all the drama over at Thinking Machines Lab, and we're also going to break down the busy week that Meta and Mark Zuckerberg have had. We're then going to break down ByteDance's valuation. We have a new column out today that argues that the company is undervalued on the secondary market right now. And finally, despite all the layoff chatter that we've been hearing, one of the biggest software companies in the world is ramping up hiring. Stick around to find out who that is. It's going to be a fun show. Let's get right on into things. TSMC reported its quarterly results. The company is surging on all fronts. I want to bring on Qianer Liu, our Asia reporter, to break it all down for us. Qianer, welcome back to the show. It's great to have you here.
Thank you for having me.
So what were the headline numbers from TSMC's quarterly results?
Well, TSMC delivered some exceptional results today. December quarter revenue up, net profit jumped to a record high for the full last year. Revenue surpassed $100 billion for the first time. The biggest revenue source for TSMC it's the advanced chips, of course, which is the 7 nanometer and below, which now account for over 70% of the revenue. And the driver behind this is pretty clear. It's chip for AI. It's not just the processor like NVIDIA's GPUs or Google's TPUs, but also the supported chips like we can saw in the data center, like those for the networks. So TSMC, because of all of this, TSMC now has become more confident in the sustained AI demand. They are planning record capital spending of like 52 to 56 billions in 2026 this year, projecting nearly 30% revenue growth for this year.
So $56 billion in CapEx. What is all this money going towards?
Most of the CapEx will be for buying advanced chip making tools for AI chips, meaning that TSMC will use the money to expand the advanced chips production capacity. But the capital spending announced now won't help, I would say won't help meet today's demand. It's for 2027, 2028 and beyond. In the near term, TSMC has to get a little bit more creative. They are boosting the productivity of at the existing factories and repurposing some of the factory space and equipment from older facility to support advanced chip production.
So I want to pivot to talking to a story about you wrote this week, which is actually, it's on the same topic, which is TSMC's dominance in the chip manufacturing ecosystem. The premise of your story was really looking at all the ways in which the world relies on TSMC. And I wonder if you can explain to us, why is TSMC so dominant? I mean, what is the secret sauce? How is it that they have become seemingly the only company in the world that can manufacture these chips as well or as efficiently as every company in the world might want them to?
Um, I would say first of all, and maybe the most difficult reason to explain is the technology. We probably need a little bit more, like 1 or 2 hours to explain why the technology is so good. But I do have high respect to
I mean,
engineers.
look, we have the whole morning, but it's late for you. So you go as long as you want.
Sure. I think like, well, technology-wise, I would say they have good technology. That's why they can achieve higher yield, which just means that if you place a chip making order at TSMC, the cost would be much more lower than you place your chip order to other places. And besides technology, TSMC's dominance also came from their business model set by their founders, Morris Chang. They only manufacture chips. They don't design or sell their own chips. It means that they will never compete with their customers like Apple and Nvidia. So everyone can trust them with their most secretive and sensitive design. So for example, like other advanced chip makers, TSMC's competitors such as Intel and South Korea's Samsung Electronics, they design their own chips but also try to manufacture for others.
Now, you talk in the story, though, about how despite their dominance, the fact that they are not designing their own chips and they're relying on contracts from these chip designers, that actually is a little bit of a limitation for them insofar as how far in advance they can forecast the facilities that they need to build.
Yes, they are. I think I remember CC Wei, which is TSMC CEO. Obviously, he was in a very good mood today, but he did mention and admitted to the analysts that they have been very conservative in terms of the capacity. Obviously, because of the business model, and also because they are they're probably the only few companies that literally need to pay like tens of billions of dollars to build the capacity and have to make sure they can serve all the capacity.
Now, if I am NVIDIA or Google, I'm looking to have a company make my chips. If I can't get capacity at TSMC, and I'm just using those two as an example, but where else could I go to get these chips made?
I would have to say for those two big companies,
Maybe
they can
maybe
get.
bad example.
I know, but it's fine. Like for Nvidia, they probably said like, oh, I want like 10 chips, but TSMC probably said like, okay, you want 10 chips, I give you 8. Like they are never going to offer as much as they requested.
Huh.
So for any companies like this, if they cannot secure enough capacity at TSMC, they can totally turn to other chip makers like Intel and Samsung, like the one we just mentioned. But can the transition is rarely seamless. While Samsung and Intel they also have advanced production capacity. They are trying to catch up with TSMC. They often struggle with lower yields at the most advanced chip productions. The yield here means the percentage of usable chips per wafer. So lower yields means higher cost to produce chips. And also switching foundry is not like switching from different cereal brands. It required, redesigning the entire chips architecture and to fix different manufacturing technology, which can take a year or two.
So if TSMC really has a stronghold on the market, you mentioned the 56 billion in capex. Are they building more factories? What is their expansion plan?
Yes, the quick answer is yes, they are building more factories.
But
Well, but not fast enough to solve the immediate crisis. TSMC is building new facilities in Taiwan, Arizona, and Japan's Kumamoto. But these all take years to come online. And there's also a global shortage of the chip making experts that needed to operate those like complicated chip making machines in those factories. So and it's not just about building the front end chip making facilities. Those are and also the advanced packaging is not enough. For example, there's one Arizona factories by TSMC has started to produce Nvidia's most advanced Blackwell chips, but TSMC still has to ship them back to Taiwan for advanced packaging.
so even if they're making them in the US, the bottleneck still remains with the facilities in Asia right now, which is that they have to
Yeah,
package them there, and then we're back to where we started, really.
yeah, exactly.
Great. Well, it's a company that I know that the world is watching, and I want to thank you for coming on and sharing with us all that you know about it. We will let you get some sleep because I know it's late where you are. That is Qianer Liu, our Asia reporter here at The Information.
Thank you so much for having me.
Okay. There was a little overnight drama in Silicon Valley after Thinking Machines Lab CEO Mira Murati said the company had parted ways with co founder and CTO Barrett Zoff. Not long after, OpenAI's Fiji Simo announced that Zoff, along with fellow Thinking Machines co founder Luke Metz, would be returning to OpenAI. Zoff and Metz both left OpenAI in late 2024 to help set up Thinking Machines Labs. Here to break down what happened and what it signals about the AI talent wars is our AI reporter, Stephanie Palazzolo. Stephanie, welcome back to the show.
Hey, great to be here.
So, what do we know? This is juicy.
I know, I know. We're kicking off the year in the right way. Just a lot of AI drama. Uh, no, but I mean, essentially, what we know for sure is pretty much what you just said. Again, last night, Mira Murati, former OpenAI chief technology officer, now CEO of Thinking Machines, she posted on X that they had parted ways with Barrett. An hour later, Fiji Simo, who's the CEO of applications at OpenAI, said that OpenAI had hired Barrett, along with two other Thinking Machines researchers, including another co-founder of the company. And Fiji basically said, these talks have been going on for weeks, which implies that this is something that had been in the works, and maybe Barrett and these other folks were thinking about joining OpenAI at least for a while.
So Barrett and Luke, what were their roles at OpenAI when they were around there the first time?
Yeah, so both of them were very senior researchers at OpenAI. So Barrett specifically was the lead for a team called post training, which is basically the final step of the training process where you get the AI models ready to be released and to be put into products. And then Luke was another senior researcher at OpenAI that was had been there for quite a while. He's actually part of the kind of original team that built what ended up becoming ChatGPT.
Okay. And remind me, I mean, these are two very important functions. Post training, that is that key battleground area that has become very competitive, right? For the models between Gemini and ChatGPT. I mean, this is a pretty important role.
Totally. I mean, post-training has been a very important part of the training process, as you mentioned, and has especially become important in, the last year or two. So it was a very big deal whenever Barrett left OpenAI in the first place to go to Mirror's startup. And, it's now a pretty big deal that he's coming back.
And just to confirm, we don't know anything about the reasons here just yet, right? This is where there's got to be some more reporting. We got to find out what's been
That
happening.
that is the big question. I think right now there are two kind of conflicting narratives coming out. So, on one hand, we have reporting that Mira had told staff at Thinking Machines that uh, Barrett had basically been fired for quote unquote unethical uh, conduct, which doesn't sound great. And then on the flip side, we see from OpenAI that it sounds like from their perspective, they had been in discussions with these researchers for weeks to potentially come to OpenAI, and there's even some stories last night that said that Fiji uh, told OpenAI staffers that basically Barrett had told Mira earlier this week that he was talking with OpenAI, and then he was pretty quickly fired just a day or two later. So there's kind of a lot of questions around what exactly happened. Was this just a researcher that wanted to make a move to a different company and then got fired for it, or did he actually do something wrong and that was kind of the true reason behind him leaving Thinking Machines?
Okay. So where does all this leave Thinking Machines Lab now?
Yeah, I mean, I think this does depend on how important some of these researchers actually were. Like, yes, I mean, these are very high profile, very experienced researchers, but we don't know the kind of exact details around what exactly were their contributions at Thinking Machines, how kind of like critical and vital were they to like the success of the startup. So that is kind of an open question, but we do have to say though, like it doesn't look great, like this is a startup that is extremely highly like it's very expensive valuation. I mean, its last um price was 10 billion, but then in the last couple months they've been in talks to raise at a crazy $50 billion price, which is pretty wild considering that the company has only really released one product, and that has it's I think those are questions about how that product has kind of uh gone so far. So it doesn't really look great to have such a young startup losing pretty important researchers and a number of co-founders in just its like first year of existing. And even investors I spoke to last night were like completely shocked, very caught off guard. They did not see this coming.
Does this say anything to you about the AI talent wars, or does this really feel like an inside baseball story of 20 people that are really just playing musical chairs around these three or four different companies? You could call it the original OpenAI group that has sort of spread their wings. Now they're coming back. I don't know. It doesn't seem like it's poaching, although maybe it is. What do you make of all this?
Yeah, I mean, this definitely ties into the broader theme of this crazy talent war that's going on. But I think this case does seem pretty specific to Thinking Machines and OpenAI. It does seem like there's more to the story here, and perhaps specific reasons behind these people leaving that have to do, with Thinking Machines or what it was like to kind of work there. So yes, I'm sure that they got paid pretty handsomely to go back to OpenAI, but it does feel like there's more to the story that's pretty specific to this one case.
Great. Well, Steph, I want to thank you for coming on. I really appreciate it. That is Stephanie Palazzolo, our AI reporter here at The Information. Okay. Meta has been very busy this week between its layoffs, its big vice chair hire, and a report that it is looking into doubling production of its Ray-Ban smart glasses. There was also the big announcement around Meta Compute. I want to bring on Gil Luria from DA Davidson to give us some analysis on how he's putting all of this news into context. Gil, welcome back to the show. It's great to have you here.
Thanks for having me.
So, big picture, Meta's making all these changes. You look at the stock price for the past year, I mean, it's flat. And yet the ads business is still surging. There are all these changes to move towards the AI opportunity. What do you make of all this?
Yeah, I mean, Meta is the least expensive of the mega caps. They're trading in the low 20s. There's nothing else in mega cap land that's not trading in the high 20s or above. And that's really just because Mr. Zuckerberg is treating Meta like his own company, like he still owns it, which he does. And investors are just uncomfortable with that. He has this unbelievable business, right? His digital ad business is growing, just grew 25%. It'll probably grow more than 20% this year at very high margins. If he just let Meta be that, the stock would be a lot higher. But he's not. He's investing very heavily still in Reality Labs, and then investing even more heavily in building AI data centers that he's not even reselling. At least for now, he's just using to do R&D. And so investors are just uncomfortable with the fact that you have such a great business, but you're growing expenses and CapEx even faster than revenue. And that's just not what other companies are doing right now.
I was going to ask you this question at the end, but I'm going to go there directly. How long have you been covering Meta for now?
Officially 2 years, but really since before their IPO.
Exactly. So you've been following the company for a long time. And the question that I wanted to ask you, Gil, is we see this version of Mark Zuckerberg, which is making big bets and not accepting the status quo of I'm just an advertising business. Has that changed at all over the time that you've followed the company? You know, has his focus, is it the way of running the company? I mean, has it been the same all along, or has it shifted recently?
I think we've had some back and forth, right? There's times where he does feel responsible to shareholders. We had famously the year of efficiency a couple of years ago.
Right.
During the year of efficiency, the stock more than doubled. Because that's, again, all investors want is, can you just be responsible with our capital? And when he does that, he gets rewarded handsomely on the share price. But to be fair to Mr. Zuckerberg, he sees a huge sense of urgency right now. He feels like on two different fronts, there's going to be a winner take all or winner take most, and he wants to and needs to be one of those winners. So one is the next hardware platform, right? We're going to go away from a handset to wearables at some point. And he wants to win that because otherwise he'll continue paying Apple and Google the 30% tax. And then on the frontier AI model, he feels like if he doesn't win there, he's just going to be relegated by those winning models and lose the biggest incremental economic opportunity out there. So that's, in his mind, he's doing the right thing. He's in founder mode and he needs to win. Now, to your point earlier about the news that's come out this week in terms of some layoffs at Reality Labs, and there were other stories about that, maybe he's willing to take that back a little bit, gesture towards investors that he's not just incinerating their money. But we'll only find out when they report and we get the magnitude of savings and the magnitude of how much he's willing to scale back ambitions on those two fronts. But again, it's very understandable. He thinks those are the two biggest winner-take-all markets, and he wants to be that winner.
Now, if you look at Reality Labs right now, the business is doing, I think, in or around $2.2 billion for the last 12 months in terms of revenue. It is obviously a fraction of what the ads business is. But I wonder, as you look at this opportunity for Reality Labs, how big do you think that business could get?
So in the short to medium term, we're just talking about the Ray-Bans, right? And maybe the glasses with the little projector, the $800 projector glasses. we're mostly talking about the $300 Ray-Bans. That is not a very big market, but it's how you get to the ultimate market of, again, the next hardware platform. Because eventually he'll be able to fit all the compute that we have in our handset into the glasses. And at that point, it's going to be as big a market as Apple's has. And that's what he's really focused on. The problem is the $2 billion of revenue is coming with about $4 billion of loss every quarter. And that's the problem, is that you don't need this much loss to build $300 Ray-Bans or even $800 projection glasses. You could actually do those for a lot less. And by the way, Google and Apple have their own effort to and Samsung have their own effort to participate in these markets. They're not losing money the way he is. So he's really investing well beyond where the platform is now. Again, because of this notion that at some point in the future, 5 or 10 years from now, that's going to be the platform that everybody's going to have. And when you have that, you can be the one that charges the 30% tax on every application.
Now, all of this talent that he has spent a lot of money on acquiring, these giant contracts, what signals would you look for in terms of understanding whether or not those investments paid off? And I ask this question because a lot of that talent was researchers, and we know that researchers are really the thing to tie them to directly is how good the models are. And we know that the Llama family of models are an open source family. They've had some mixed reviews. And so are you looking to see that, hey, maybe the next family of Llama models, maybe it really excels on the benchmarks? Is that what we're looking for? Are we looking for ultimately the next wearables product to be a big hit with consumers? You just said the market wasn't that big. How will we know if this research investment will have paid off?
No, that's exactly right. The next frontier model from Meta needs to be competitive. You were being kind when you said mixed reviews. The last iteration of Llama.
I'm a nice guy. I'm a nice guy, Gil.
I'm not as nice. The last iteration of Llama was a colossal failure. That's why he fired everybody and spent billions of dollars hiring a new team, is that the next model better be good. Because at this point, between what Google, OpenAI, and Anthropic are doing, they're pulling away. It's not like they're stopping in their tracks with the current generation of frontier model. If the next model from Meta doesn't at least catch up, they're in a lot of trouble. And by the way, they've probably wasted $100 billion or more doing that, between the CapEx, the salaries, and the operating expenses. We're at least $100 billion into trying to develop a new model. It better be good. Maybe this iteration won't be better than the other ones, but it would have to at least somewhat catch up for us to believe that the iteration after that would be better. Now, we don't expect it to actually be open source.
It'll be closed. Okay.
Just because of where the market is headed.
Yeah.
And by the way, we're not hearing good things about how things are going inside of Meta's Frontier Lab. It's in the organizational, cultural issues there don't go away just because you're paying somebody $14 billion. Those issues sometimes get worse when you pay somebody.
What are we hearing?
That they're not necessarily having success with the development of this new frontier model. And maybe it's happening quietly, but the scuttlebutt in the industry is that they're actually the next generation of the frontier may actually not be competitive.
Last question for you. We have talked on this show about the relationships that all the various tech companies have and are building with NVIDIA. It is obviously a very important company in the ecosystem. We haven't yet seen any headlines about any big partnerships between Meta and NVIDIA, at least explicitly. And one of the predictions that we've had from a few of our reporters here at The Information is that we might see that this year. We might see NVIDIA and Meta get together in some official way. How realistic do you think that is? And are you expecting something there?
So your reporters have done a great job. Anita and Anita have done a great job reporting on NVIDIA and Meta and Google's TPUs. And we would expect Meta to diversify away somewhat from NVIDIA by buying more TPUs. And that's part of the story that they broke. But realistically speaking, everybody's still buying NVIDIA. Everybody's probably
Right.
buying as much NVIDIA as they can because NVIDIA works. They know how to use it. All their scientists know how to use it. It's available. You could plug it into the data center. You know it works. It's not, oh, will this next generation of TPUs be very good? Will the next generation of AMD be very good? Jensen's chips work. The next generation is going to work even better. You know that. And so NVIDIA will continue to be the lion's share of AI compute equipment for the foreseeable future. But all these companies, all of NVIDIA's customers want to diversify away. They don't want to be beholden to one vendor. So there's this aspiration to diversify away. And right now, the main way to do that is to use or buy Google TPUs.
Great. Well, Gil, I want to thank you for coming on. It was a great conversation. That is Gil Luria from D.A. Davidson here on TITV. Okay. What is ByteDance worth? That has been a big question as the company remains one of the largest companies that has yet to go public. My colleagues Anita Ramaswamy and Jing Yang published a column today suggesting that the $330 billion price tag that ByteDance is trading at right now on the secondary market is undervaluing the business. I want to bring on Anita to walk us through her analysis. Anita, welcome back to the show. It's great to have you here.
Hi there, Akash. Good to be back.
So $330 billion is too low, you say?
Yes, that is the point of view.
Why?
It's too low looking at ByteDance and some of its comparable businesses. I mean, just to take a step back, ByteDance is a huge business. It's digital advertising focused. It has apps including TikTok in the US, Douyin in China, and a bunch of other social media apps. And then in addition to that, you have a virtual reality business. You have all sorts of things in this giant company. And it's basically just now gotten to the point where its revenue scale is similar to that of Meta platforms. But Meta is trading at a much higher valuation multiple than ByteDance is if you sort of forecast out some reasonable projections for this year and next year's revenue. So the point to take away here, Akash, is ByteDance has grown really fast in the last couple of years, but a lot of regulatory issues, especially in the US, have contributed to TikTok trading at a discount to some of its peers.
Now, you say revenue is around the same range as Meta. So how much revenue are we talking here?
We're talking the $200 billion annual revenue range.
Okay.
Obviously, ByteDance is private, so we don't know for sure, but there has been some reporting on their quarterly revenue. And if we sort of extrapolate that out, that is a revenue pace of around $200 billion for 2025.
And do we know anything about the growth rate of the business?
Yeah, so compared to last year, the Q2 revenue growth for ByteDance was around 25%, and it was a little bit faster last year. So there has been a little bit of deceleration in the business, but if you look at where ByteDance is growing and where Meta is growing, very similar growth rates, and actually ByteDance is a little bit faster.
So Meta is one company that you could pick as a comp. Are there other companies that you look at? And we're only talking about companies based here in the US right now. I wonder if you looked at companies that are trading publicly in Asia.
Yeah, it's a really good question, Akash. I mean, Meta is obviously the one that comes to mind for a lot of people in the US. If you think about TikTok and Reels and just sort of the usage and consumption patterns of something like ByteDance's products. But in Asia, Tencent is a really good comp to look at as well. And Tencent also trades in the range of 6 to 7 times next year's revenue, which is around the same multiple that Meta is at. Now, if you look at ByteDance in comparison, once you do that projection, if you assume this year ByteDance is going to grow at 25%, and when I say this year, I mean 2025, the period for which they haven't reported yet. So not literally this year. 2026, if you assume they're going to grow at the same rate, 18% that analysts expect Meta to grow at, then we see ByteDance would be trading and is currently valued at a multiple of around twice next year's sales. So there's obviously a really big gap, not only with Meta, which is a US peer, but also with Tencent, which is a digital advertising Chinese business.
Now, you mentioned at the start the drama around TikTok's US business and that sort of being an overhang over the company's head, and maybe that being one reason why the company hasn't been valued as high. And I'm talking about the whole ByteDance business here. Is that the only reason that you see as investors undervaluing the business, or are there other parts of the business that still could remain questions even after TikTok US sort of, and we kind of have an answer now as to how that story plays out, right?
Yeah, I think that the regulatory overhang is the biggest thing without a doubt. I mean, it's been almost 5 years that there has been talk in the US about a TikTok ban and, regulators and the president have discussed that as a real possibility. That question is going to get resolved in about a week. So next week, that's when the deadline looks like it's going to pass, and it looks like ByteDance has so far been able to come up with some financing partners with a deal that should, in theory, appease the president and bring it into compliance with that order. And so I think that'll remove a lot of uncertainty for advertisers, for customers, even for sellers on TikTok Shop. But the other question, Akash, to your point, besides all of this regulatory stuff, is twofold. I think, firstly, investors in the US especially do tend to apply a discount to all Chinese companies. So even though TikTok might be able to resolve their issue of US ownership, there still might be, some jitters, some uncertainty around, can the deal actually close and what does the future look like in terms of the geopolitical tensions? The other, kind of question that investors might be asking themselves is about profitability. ByteDance, just like so many other tech companies that we've seen, has been investing really heavily into AI. And they actually have warned, some executives have warned investors in the past that it could potentially drag on their profit margin in the future. We haven't seen that happen so far, but that's another consideration that folks are thinking of and that's top of mind.
Although I will say it's no different than Meta, right? I mean, Meta's advertising business is carrying the company, and that is the business that is highly profitable. And investors give a lot of credit to that business. And so you would think that, at least in ByteDance's case, they have such a tremendous ads business. They should be given the same credit, even if they're investing in AI too.
Yeah, absolutely. And perhaps even more credit, I think you could argue, because TikTok, or not TikTok, ByteDance's apps in China are doing really well. They are actually a much larger portion of revenue and a much larger portion of profits. And they have been able to sort of implement live commerce in a way that has not really taken off on TikTok and in the US. And so those assets and the way that they're using AI in China has so far been really effective. And we haven't seen, exactly how the rest of the race is going to play out. But if you look at, like, one of ByteDance's apps quickly became the most popular AI app in China. Whereas if you look at Meta
Which app was
AI,
that? Which app was that?
this is one of their Chinese social media apps.
Got it. Got it. But and I think just to close the loop on this, I mean, I think the most interesting part of this story is that right now we only have the secondary market valuations to go off of because the company's not yet public, and it's been a big question: when will ByteDance go public? I mean, based on what you have been hearing, we obviously do a lot of reporting on this at the information. Do we have any sense about if it's going to happen this year, next year, how close we are to finally getting the financials in a very public way?
Yeah, wouldn't that be nice? Then we can do some analysis on them. But
Yeah.
no, I mean, this is something that's been anticipated for a long time. And we had some reporting in this recent piece that ByteDance executives at one point told investors that the company wouldn't actually be able to start the IPO process until this US issue was cleared up. So now
Right.
that that's happened, it sort of suggests that it's possible an IPO could be on the horizon. Of course, there are a lot of different considerations that have to be taken into account. Will this be approved by the Chinese government? What other potential snags could there be? So it's certainly not a done deal, but I will say that it seems like the company is taking some steps that would position them well if they did want to take that leap.
Great. Well, Anita, I want to thank you for coming on. It was a great column. That is Anita Ramaswamy, our financial analysis columnist here at The Information. Okay. There have been a lot of questions about what AI will mean for hiring, especially at the junior level, where people coming out of college don't have as much experience. But ServiceNow is flipping that narrative on its head and leaning into hiring younger people. Our AI and robotics reporter, Rocket Drew, wrote a piece about that today, looking at that trend, and I want to bring him on to talk all about it. Rocket, welcome back to the show. It's great to have you here.
Hi, Akash. Great to be here.
So, I thought tech was about layoffs right now. Isn't that the big story?
I thought so too. What gives? That's what I'd been hearing. And definitely layoffs are on people's minds this week after Meta laid off about 1,000 employees from Reality Labs. But it turns out the story is not so consistent across the board. Different companies are seeing different things. So, what we wrote in Agenda this morning is that ServiceNow is still hiring a decent number of people who are early in their careers. I was surprised to hear it. It's one data point about the bigger picture of what's going on. And this is consistent with it being a tough time for recent grads to be on the market, but I think it helps fill out that picture of what's going on.
Who are they hiring?
So they're considering early career people to be people who have 0 to 2 years of experience. And last year, a quarter of the people they hired were in that camp early in their career. On top of that, they hired 500 interns. Now, this is across a number of roles, but a decent number of them are software engineers. Nearly 3/4 of these people, of their early career employees, are in technical roles. So, of course, there are also employees that are working on sales and customer facing things, but 3/4 of their early career employees are technical. So it does give you a sense of where the industry is.
Now, you wrote in your piece about how the company is trying to lean more into hiring these AI native employees or people who might be a little bit younger, coming out of college, and I guess the idea is what, that they know how to use the tools better than you or I, and I mean, they have more familiarity with them, I guess.
Yeah, I think that's right. I mean, there have always been advantages to hiring employees who are younger and more in touch with the latest waves of technology. They can always bring fresh energy, but these days an advantage that people point to is that younger people are AI native. I think the examples I've heard cited for what being AI native looks like are a little extraordinary. I've heard about 10-year-olds writing books with ChatGPT. I've heard about 16-year-olds creating startups using AI. When I think about in practice what it will look like to be AI native, I actually think about when I was in elementary school. Because when I was in elementary school, the school was pushing really hard to teach us kids how to use the internet, how to use Google search. And we would, diligently file into the library maybe once every couple weeks. And the librarian would try to explain search terms to us, how to use Google. I mean, this is to their credit. They realized the internet was going to be a big deal. But in hindsight, it was a little silly because any one of us kids in that classroom knew how to use Google better than the librarian who was giving the lesson. It came naturally to us.
Do
And
you,
I
do,
think that's what's happening with AI.
do you remember who your favorite teacher was, or the librarian's name?
I can't say I recall. um,
I mean, the librarians are the most important people, Rocket. We gotta, we
true,
gotta,
that's true.
we gotta remember that.
But I think for
Um,
kids these days, the AI, it's in their blood. It comes a little naturally. They have time to just
yeah,
experiment with it and learn what works.
yeah. Miss Love was actually the name of the librarian at my school, and
Oh, there you go.
she's probably never gonna watch this, but if you're there, Miss Love, thanks
Shout
for
out to
teaching
you.
us the Googles.
Yeah,
Teaching us the Googles. Wow, we really are old, Rocket. Okay.
that's right.
Um, Look, so you talked about ServiceNow leaning into AI native hiring, but what about teaching existing employees how to be more AI native? Does it have programs to that effect?
Yeah, it does. I think that's a really interesting piece of the story here and what you sort of wouldn't expect just hearing the narrative of what's going on in the industry. ServiceNow is also asking how they can take advantage of AI to teach all of their employees skills. That also includes non-technical skills, but technical and AI skills as well. So they're creating a mind gym, is what they call it. And the idea is you can get some routine practice and sharpen the skills that will help you out in your career. So for example, maybe you're a software engineer and you have a line of code that has a bug and you want some help debugging it, you can put that line of code into their mind gym and you can get coaching, AI coaching on the best ways to go about debugging it. So that's an example of how they're trying to take advantage of AI to teach people different skills, soft skills as well, but technical skills too.
Now, is this story unique to ServiceNow, or are other software companies also pursuing this approach? Because there is that whole narrative around AI is going to eat enterprise software. It's going to change the game entirely. The number of seats that people will have to buy for their subscriptions will go down. ServiceNow seems to be avoiding that for the most part. What's happening at, I don't know, Salesforce and Atlassian, all these other companies?
Right, right. I think the fuller picture is still coming into view, and I would caution that, this is just one data point about what's going on. It's possible that a number of companies are staying the course and continuing to hire, but more and more recent grads are entering this market. So it's possible that from the perspective of a ServiceNow, it's business as usual, and from the perspective of a recent grad, it's a really tough time to be entering the market. Like those things are compatible. I will say, I think startups are seeing something wildly different. I think startups are getting very picky about the kind of hires that they make as AI is getting better and better. But I'll have to leave you on a cliffhanger for that one because we have a story coming out about that this weekend.
There you go. Okay, well, I will see you Monday, bright and early, or maybe tomorrow. We'll talk about it. I'm excited to hear more about that one. Rocket, thanks for coming on. That is Rocket Drew, our AI and robotics reporter and our library enthusiast here at The Information. Well, that does it for today's show. A reminder that we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. Have a great rest of your Thursday. Bye-bye for now.